We're going to turn our attention to the annual Kansas City Federal Reserve Bank Symposium in Jackson Hole, which is underway now. It's underway virtually, but it's still got the information that most investors, economists, and other financial individuals want to follow closely. Brian Cheung joins us now because he's going to begin our discussion of what's going on there with a key question. Is it time to taper, Brian?
Thanks a lot, Adam. Well, the actual conference is set to kick off tomorrow. It would have started off today if it weren't for the fact that the Federal Reserve moved it to a virtual format. But joining me now is a special guest who can help us break down what we might expect from the Federal Reserve. Senior fellow at the Peterson Institute for International Economics, Maurice Obstfeld. It's great to have you on the show today. And your specialty is really looking at things through a global lens from your time at the International Monetary Fund. And I kind of wanted to start off there. When it comes to the discussions at Jackson Hole, the big looming shadow, if you will, is the Delta variant and its effect on global growth prospects. I'm just wondering how you feel the rise, not just in the United States, but around the world, is maybe threatening global growth.
Well, we've seen the Delta variant explode in the United States, but the rest of the world, particularly poor countries, have much lower vaccine coverage than we do. And so the threat to them is, if anything, even greater. Delta will have a negative effect on growth there. And until we can get more people vaccinated throughout the world, this threat will remain. Even worse, as the virus continues to spread, there's the threat of further variants. Remember how Delta got started in India? Spread quickly to the rest of the world. Things that happen in Africa, say, or in South America, East Asia, will not stay there. There's no way to keep the virus out. It doesn't respect borders. And so it seems to me it should be a prime imperative of policymakers worldwide to get the whole world vaccinated.
And when we talk about just kind of the way that things that are happening in emerging and developing countries can spill over into the United States, it can kind of work the opposite way as well. And I'm thinking about policy implications from the monetary policy side of things. A lot of the discussion going on right now around this Jackson Hole conference is whether or not the Fed might be ready soon to begin pulling back on its extraordinary accommodations providing since the depths of the pandemic. Is there any impact on emerging and developing economies and their growth prospects if the world's largest economy is starting to tighten policy?
The impact is huge, Brian, and it's not just the fact that this is the world's largest economy. It's the fact that the dollar is, in effect, the world's currency. It's the currency in which international reserves are held, in which trade is invoiced. And so whatever the Fed does has an outsized effect compared to the actions of other central banks, such as the ECB or the People's Bank of China. Historically, a very, very strong dollar is negative for emerging markets. It's negative for global trade. So if the Fed were to find itself in a position where it needed to tighten abruptly, say it got behind the curve on inflation in the U.S., that could have a very big negative effect on emerging markets.
So let's dive a little bit deeper into that, because as you mentioned, the other central banks and what they're doing play a role in this as well, because that creates the interest rate differentials, which can affect FX dynamics. But when we talk about what's going on in the United States, it's not the same story as what might be happening in other advanced nations or in the emerging developing economies as well. So when it comes to just the order of all of this happening, do you feel like the Fed is tightening at a slower rate than, say, other emerging and developing central banks that people aren't necessarily reading in the headline of the Wall Street Journal day to day?
Well, the Fed is going to be tightening more quickly than those countries. I think if you look at where we are in terms of economic growth, and especially where we are in inflation. Inflation in the U.S. currently is running far ahead of what it is in other advanced economies. So that tells me that, in all likelihood, the most probable scenario is that we see a stronger dollar down the road.
So I want to talk about the idea of R-star. And before we lose some of our viewers, basically the idea in monetary economics is that there is a longer run neutral rate that you can get interest rates up to, where it's neither stimulative nor restrictive to the capacity of the economy. And there's a lot of discussion about how the COVID shock may have impacted where that level is, which is important because it's a guiding star for a lot of central bankers. So not just in the United States, but broadly speaking, do you think that there are permanent changes that have led to shifts in R-star in different types of countries? I guess this might depend on whether or not you're looking at a developing or an advanced nation, because productivity may have boosted where R-star is, but then damage to the labor market may reduce it.
You're absolutely right, Brian, that scarring effects may affect R-star. And I think the question to be asking is whether there are any reasons to expect R-star to turn up. You know, it has been very low. It has particularly been low in the pandemic. Why might it rise? And I look at two factors. One is productivity growth. And remember that R-star is a global interest rate. We have a globalized capital market. So it basically depends on saving and investment trends throughout the world. And so emerging markets play a big role there. And their growth rates have been secularly declining. And they're certainly not being helped by COVID. The other issue, which is a worldwide phenomenon, is demographics and aging. And aging societies tend to lower R-star. So going forward, I see no reason to expect a big pickup in R-star anytime soon.
Can we talk about the savings bit? We know that anecdotally here in the United States, there's been a lot of stimulus. A lot of households have more saving while they're also out there spending more. Is that the same story that you're seeing in a lot of other emerging and developing countries where maybe they would have liked to do the same thing, but just simply didn't have the fiscal space to do so?
Yeah, well, they definitely have not had the level of fiscal space that we have in the U.S. And what we've seen in the U.S. is an increase in private saving coupled with a big increase in the dissaving of government. Historically large federal deficits in the United States, bigger deficits in Europe. Emerging market economies just don't have the kind of fiscal space to do that. There's not as much scope for people to save more. They're not getting $1,400 checks. They're living much more on the edge. So it's a very different situation from what we have in the advanced economies.
All big questions, and certainly important to get that global lens on what's happening as the Fed kicks off that conference tomorrow. But again, Maurice Obstfeld, Senior Fellow at the Peterson Institute for International Economics and formerly of the IMF. Thanks for stopping by Yahoo Finance this afternoon.